Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. What's up, guys? Good morning. Welcome back to another live stream. Hey, there's this cool new feature in our streaming software that allows us to do polls. I've never seen this before. I can move it around on the screen too. I don't know. I feel like maybe best spot is right there. Let's try it out. Can you guys give that a shot? Type 1 in the chat if you're bullish gold, 2 in the chat if you're bearish on gold, and maybe that will. We have no votes, so drop me a, you might need to just do just the number 1 or just the number 2. I'm not sure if the software will pick it up, but this is a new feature they just added. Okay, there we go. Yes, Daniel, you are the first voter. Put in a 1 in the chat. 2, very nice. Look at that. It's populating. That's cool. That's really cool. It's a new feature within the software that we stream with, which is StreamYard. So really cool. Awesome. So I can leave that up for a second. Let's start with gold because we're talking gold in our poll. You guys let me know. Give me a 1 in the chat for bullish, 2 in the chat for bearish. Man, that's hype. I'm pumped about that. You know why I like that so much is because instead of it being, when we said it, this is too much information for today's show, but we stream to like a bunch of different locations. My YouTube channel, another YouTube channel, Twitter's, Facebook's, Twitch, Kick. We stream all over. Telegram. This allows people across all the different platforms to still chime in on their vote, which is really cool. So anyways, you guys seem a little bit more on the bullish camp of gold. 63% of respondents, 60%, let's call it, saying bullish, 40% feeling bearish. I'm going to agree with you in the sense that, well, it depends. It depends. If I'm thinking short term in my bullish bearish gold, yeah, that's going to be more bearish. If I'm thinking longer term, I'm thinking that's more of a bullish opportunity. Man, I'm hyped about that because now I'm thinking like, what if the producer periodically threw out some polls like this? That would make the streams more fun, engaging, give you guys a chance to weigh in on stuff. So we can stop the poll, and then that's locked in. We have 60-40, and then I can hide the poll, and it's gone. Pretty cool. My thoughts on gold. So let's do it. A lot of traders here love trading gold. My thought process on gold is still a little bit cautious to bearish in the short term. In the short term. Cool mustache. Thank you. I'm giving it a shot, guys. Giving it a shot. Actually, what's crazy is my wife is actually like, she likes it to an extent. She's like, I go back and forth. Let's give it a few days. Let it fill out, if you will. I don't know. We'll see. Maybe we'll do a poll on that, and I won't care what you say because the wife is boss on that. Sheriff Nick, young old man. So let's get into some analysis here. When it comes to gold, I am pretty neutral in terms of like actual would I go long? Would I go short right here? I'm going to feel a little bit more in the neutral camp. Although longer term, I have actually placed some bullish trades on gold. Let me explain. I talked about this in my video yesterday. Some of you may already be familiar with what I'm about to say, but I sold a cash secured put on GLD, and I love doing this. Okay, because bullish when you trade options, you have a lot of options on how you can play things. So what I did is I sold a put. So someone else out there bought a put. They're betting, oh, the gold's going to drop hard. I sold that put option to another trader out there. Now you might be saying, well, I don't trade options, so put that into simple terms. Well, it's a slightly bullish to neutral strategy when you sell an option. Think about this. If I sold you a bet that, let's say you are very bearish on gold, or you're very bullish on gold, and you're like, I think gold is going to go up to 480 in the next month on GLD, right? Or 5,000 an ounce on gold spot, whatever it is. If that happens for you, then you obviously your bet hits and you make good profit on that. But there's also somebody who sells you that put or call option. And you, the put buyer, the put or the call buyer, you pay that person a premium. So I collected about just under $3,000 for selling this put to someone else. Now, if the stock GLD, gold shares, if this thing goes sideways for a month, that option expires worthless. Is that good or bad for me? Remember, I sold the option. I shorted that option. If the option is now worthless after a month's time has passed, that's to my advantage. Options benefit. When you sell options, you benefit from time decay. As time passes, if the bet has not hit, the longer that bet, loses time, your put option loses value. Nick is somewhere between 20 and 40 years old. You're correct. I am. I'm just under 30 years old. I turned 30 years old this year. Happy wife, happy life. Only mature guys understand this. It's you get a lot. Some people get really upset with that expression. They're like, no, it's happy man too. It's like, well, us dudes, we're simple creatures. At least I like to think so. And my wife is a lovely creature, but more complex than I. And if she's happy, I'm happy. It's that easy. My wife and I, we finished working on our fire pit outside yesterday, and then we played this game. If anyone's played Monopoly Deal, it is really fun. We sat there and played. She beat me 3 times in a row, which, yeah, that was not fun. But we played and had a good time. Anyways, life is good. Mustache is growing. Can't complain. S&P 500 is positive today, up 0.25%. So rebounding a little bit. And, it looks like you're trying to bottom here. You're trying to bottom here. And a lot of forces are trying to bottom this market out. The biggest one, of course, being the U.S., the White House, is trying to hammer in some kind of, hey, this ceasefire is going to happen. Things are, and there was actually confirmation. This is the first time this narrative has shifted a little bit from the Iranian side. Like, we're in contact. We're in discussion. We have seen that green light. And so that to me tells me hold up on any short side action, because that could get, that could be a face ripper rally, as they say. Over the weekend, this is the challenge. There's military stuff moving into the region, which is scary. But at the same time, you also have discussion. Hold on, let me give you 1 second. I just switched this over. There you go. We are doing the free week, by the way. If you have not tried out EdgeFinder, it is free to use this week. There is discussion in the Middle East of wanting to make, or being open to discussion. However, here's the skepticism part. both sides still have massive demands, and that they're insisting upon in order to conversate further. And the challenge is that Iran has these huge demands. The U.S. has these huge demands. And meanwhile, the U.S. is moving more and more military stuff into the region. So you could really go either ways. And again, I am not a military specialist. I'm not a specialist on the Middle East. I can't give you an answer of knowing for sure what's going to happen next. And no one really can. The market doesn't like that. And that's why the market has been selling any sort of significant pops, and why I think you're not up more. If the market thought, you know, hey, that ceasefire is definitely going to happen, this would not be the type of market you're in. You'd be in breakout territory. So I'd watch for that. You know, I think following trend, following price here is maybe the wisest thing that we can do. Keep your eye on what is happening with oil price. Keep your eye on the S&P 500 as it retests what is a very bearish market structure here. Look at your 4-hour charts. Very clearly, very simple downward trend, right? Ask the moving average guys on 4-hour chart. Put your moving averages. That's a bearish trend. Put your market structure guys out there, guys and girls, I should say. Lower highs, right? Market structure is still bearish. Look at the way that intraday we completely failed yesterday. Kind of bearish. The bulls would point out, well, you did put in a higher low and you're trying to push back up. I would say if you're bullish on this market, let's see it, right? Let's see that proof. Let's see that breakout. If it happens, if the ceasefire does come through, put aside your political biases. Oh, I really don't like Trump. He's not going to be successful. Or, oh, I really like Trump. He's for sure going to be successful. Put that to the side for a second and watch price. If price can break to the upside with decision and close definitively above some key spots, to mark those key spots, well, you've got one being tested today. The high of that Truth Social post, right? Oh, you know, Iran wants to make a deal. We're going to postpone striking power plants, right? That did get faded, but if you break and close above that, I think that sets a tone of, well, actually, things are de-escalating. Watch for that, right? At the same time, if you continue to see bad price action where sellers are coming in on every rally and they start failing, bulls start failing to hold even the capture that we had yesterday, you start looking at this from a technical perspective, that looks very bearish. So where am I at with it? Again, I know I'm a little bit annoying by being so neutral camp, but I am still kind of neutral camp when it comes to the S&P 500. Look to macro, right? We just looked at price. Price looks pretty bearish in the 4-hour chart. However, on the daily chart, you're sitting at 200-day moving average. You're still kind of testing that area. Long-term uptrend is still somewhat intact. So I can't justify like, all right, now's the time to just hammer the short sell side. I just can't. But also the bull side is challenged by recent price action. Do you have a link for the free EdgeFinder week? Yes, you can scan the QR code right below my screen. And or if it's easier for you, we'll drop the link here in the live stream chat where you can grab access to the free week. So I'll drop it here in case, James, I'm not sure if you have it on file. Oh, you got it. Bam, he's quick. He's quick with it. EdgeFinder free week. Yes, it's going on right now. Try it, man. If you have never used EdgeFinder before, try it out this week. It's a good chance to do so. So if I look at macro, right, for some guidance on this, what do I have for S&P 500? Inflation is sticky, not good, but economic growth data is pretty good. Jobs market data, pretty mixed. So I stay kind of neutral camp. So in the meantime with S&P 500, I know it's annoying. I don't like to be neutral either, but I have to stay neutral. Best to wait. And so in my view, how am I playing that neutrality? Well, I told you I'm selling options, right? I'm selling options down at levels where I feel I would get some good discounts. I sold puts on Microsoft I don't know if I marked it on here. Yeah, I did. I sold puts on Microsoft if it goes lower. I sold puts on Salesforce if it goes lower. Sold those yesterday during that sell-off that we saw on Salesforce. I sold puts on Netflix. I sold puts on ServiceNow. When you're selling puts, it is a neutral to bullish strategy. But I sold out of the money puts on ServiceNow, on Microsoft, etc. So I am willing to buy stocks if they continue to plummet lower, but I'm not chasing, etc. Nick, I can't wait for your content on options for poor people on the other channel. Yeah, I should talk more about it on there. I have been really enjoying that secondary YouTube channel, and I will be discussing more stuff in regards to options. Look up credit spreads. That's the easiest way to trade options on a smaller account. I mean, selling cash secured puts is very much a cash intensive strategy. But you can definitely still trade options on a smaller account. You just use credit spreads. They're essentially a very similar thing. Let's take a look now at the dollar index. If we look at the daily chart, still chopping around here. Bulls, I would argue, are still in control of price action. Just take a look at your daily chart. Very clearly defined upward trend here recently. Let's clean up this area here of support just a little bit. So we have just recently gone into retesting this area. However, there's something to prove here for the bulls. And again, it goes back to that challenge of the neutral stance that I have on S&P 500 is partially because inflation stickiness, I think, could send the dollar higher. You have technical uptrend structure here. However, on the weekly and monthly, let's stay weekly. On the weekly time frame, you have some pretty big resistance that we are currently testing. Understand that this is go time for dollar bears. If you're a dollar bear, this is go time in the sense that if this does not fail to break lower, if instead we start flipping to the upside, right? We came down as far as, with this recent move, 95.6 or so on the dollar index. We did put in a lower low there, and then just this smacked back the upside. The question for the bulls, do you break this 100.5? If that happens, this is hard market structure to ignore because you have been in a coil for some time. We had this clear distribution move, this very big sell in the dollar index that has turned into a maybe a year and a half of chop, where we stopped cold, went sideways. And if you're a bull and you see this move, to me, you see that move coinciding with a spike in yields, dollar might actually explode, like might rip. Why? You have the combination that is the dangerous concoction potion for the dollar bulls. Let me explain. You have inflation back on the rise. Geopolitical events are surging US dollar demand because the dollar's the quote unquote safe haven. It's the global reserve currency. People rush to that when they're uncertain. And by the way, this situation in the Middle East, I discussed this in my video yesterday, disproportionately hurts other countries more than the US. The US is energy independent. They have enough oil. The US has their own oil. We are net exporters in the US. Meanwhile, other countries, much of Europe, Japan, Southeast Asia, etc., you have a challenging circumstance here in which they are very oil dependent and oil is frozen up. Granted, the dollar index is likely to move with what's happening next in Iran. If you have de-escalation dollar index probably cools off, and then we stay in this go nowhere dollar index range on a weekly time frame. On a short term, there's been really good moves in the dollar index. I've been able to short Kiwi dollar and pound dollar, and I have done pretty decent with this. I caught a lot of the move lower in the pound dollar. I also just recently closed out of my position, took full profits on Kiwi dollar shorts, took profits at these lows. And if I go to EdgeFinder, let's see, Forex scorecard. Are there any videos on how to use EdgeFinder effectively? Absolutely. In fact, can I drop some? Let me just pull this up. Make sure I send you to the right place. I'm glad that you said that, because I think that everyone here who is trying out the EdgeFinder for free this week should do something. You should, if you know Marco from the show, he comes on multiple times a week. We've had his help with creating a playlist of how-to EdgeFinder videos. I do a lot of videos, and I used to do a lot more EdgeFinder tutorial videos. I have some old ones on my channel as well that you can check out. But Marco has done a phenomenal job putting together some tutorials on how to use EdgeFinder within this playlist, right? Let me, oh, hold up. Did I send you the right playlist? I think I sent you the wrong one. Hold on. That is our old one. Here's the new one. Use this link right here. So in this playlist, check this out. Marco's done a great job. We put together these videos here. You've got a playlist on how to use EdgeFinder, and Marco actually just put together a video on how he uses EdgeFinder exactly to find the trades that he takes. I put out videos like this. You can search it up on YouTube, search up how to trade with EdgeFinder Trader Nick. If you want that, you can find it there. So numerous videos. The other place to go, by the way, is head over to a1trading.com, head over to EdgeFinder tutorials, and you have numerous videos and guides that our team has done a remarkable job putting together for people that want to explore the tool. So yes, there's tons of educational resources on how to use EdgeFinder. James, who's the next person on the live stream, he does remarkable work in terms of education. He has a guide on how he uses it. So we'll have that for you. If you stick around for a few minutes, like 100%, please do this. Stick around for a few minutes when James is on here from Elite Traders. He has a guide on how he uses EdgeFinder. So there's like so many different great traders who are using it and have their own individualistic styles on how they use EdgeFinder to find setups. So depending on who you jive with, if you like my style of trading, if you like Marco, if you like James, we've all kind of got our own unique spin on how to use the data within EdgeFinder. But EdgeFinder is your data portal, right? EdgeFinder is not an out-of-the-box trading strategy. It is a portal that helps you look at economic data. So if I look at, for example, dollar crosses that look attractive right now. Ooh, and we have some scores out there today, guys. Kiwi dollar is still getting a very strong bearish reading, -11 score. This would be one that, you know, if we did get a retracement on this, I may rejoin the trade. I may trade this one again. That ended up being, that was such a crazy like entry. I did not expect it to reverse that sharply at the time that it did, but it did. Kiwi dollar dropped like a rock. I wish I had more size on it. If we see a, and that's hindsight speaking, by the way, there's no, you should always have a pre-planned amount that you're willing to risk, etc. I'm partially joking when I say that. Clearly, in hindsight, I wish I had put the whole farm on that short position, but you can always kind of play that game with yourself. In reality, the way forward for me is if you do get a rebound in Kiwi dollar, I may look for another short position on this one. I'm also looking for short positions. Let's start fresh here on British pound US dollar. This level has also been a major level of supply for the sellers. So if we do come up into 1.3450 on the pound dollar, this to me looks like more of a sell side action until proven otherwise. If it breaks through, you know, that would kind of end my good streak on the dollar. If you were to break, let's call it 135, 134.80 or so would kind of be my, all right, probably need to hop out of that trade somewhere around this. That's a trade setup for me. And I'd be looking for, again, an extension back down to the lows and perhaps even beyond. Dollar yen to the upside. I'm a little cautious on this one due to possible Bank of Japan intervention stuff. We are very near that 160 level that we know that Bank of Japan really does not like. So that one might not be as favorable to me. Pound dollar shorts, euro dollar shorts. Euro dollar actually looks really interesting at these levels right now. Let's just mark this up. So euro dollar, this is a daily chart setup. You do have a pretty big level of support being tested here, bouncing up, but I would not be surprised if we head back down to this. This to me most likely looks like a keep going lower type move. But again, it's dependent, right? It's dependent on what is happening with the geopolitical stuff. Because right now the dollar has this persistent bid that, in my view, is unlikely to go away until the bid on oil goes away, right? Due to the geopolitical stuff. Yesterday, oil did get hit hard back down. Taking a look at oil. So I do like several dollar crosses. Again, stops in place in case I'm wrong on that idea as always, but US oil is actually getting a -1 score. That's the first time I've seen a negative score on oil in a long time. That's not bearish, it's just neutral. But technicals have shown signs of potential reversal. The seasonality does not look super great, although I think these things kind of pale in comparison to the next Trump headline, right? To be completely fair. Economic growth, still supportive of oil demand. Inflation data. And by the way, remember guys, oil was moving up before all of this geopolitical stuff for like a few months. And we were bullish on oil during that time. I caught some good upside trades. I've traded in the geopolitical stuff recently. But I do think, and I've said this before, I do think that the easy money on oil is likely behind us. I don't have a huge like, oh yeah, no, you just buy this right here. Like I think the easier money, I know this is again, hindsight speaking, so please bear with me, but feel free to go back and watch my videos at the time. The easier money was this churning upside move breakout. And we talked about it, right? We talked about the moving averages curling up, right? Everything changed. We had this no bid on oil. Every time you had a rally, it was sold hard, rally, sold hard. But this time you had a slow bottoming out pattern and then price ripped through, retested that 200 and just went, right? So I think the easy money on oil is behind us. Again, I know that's like, oh, of course it's easy money in hindsight. I get it. I just think going forward, there's not, at least for now, I don't see 120 plus oil very, very likely. I don't see that. It seems like both sides are to an extent open to the idea of negotiations, even though they both have high demands. That's where you start negotiations at. It's like, I want everything. Well, I also want everything. The next part is, well, are you willing to drop some of yours? And then, that's how that typically goes. But the other thing is that specifically, I saw that Iran and the US were negotiating, and the US left Israel out of that picture. Now, again, not a geopolitical specialist by any means on the region. Consider me ignorant with this, but my thought process is, if US is leaving Israel out of the conversation, Iran might like that. They might be like, all right, at least you're not like, bringing them to because they're, sworn enemies. They absolutely really do not like each other. So maybe that's an act of good faith. We'll see. We'll see where it all goes. Very, very challenging headline circumstance. A lot of people really upset with this market recently because you're getting these changes, right? You're getting one day it's like, oh, we got the green light, and then smacked back down. And then the next day it's, you know, happening again. So really, really tricky. But at least recently, oil seems to be in a bit more of a sell direction. It seems like the market is sniffing out that you may be starting to see some kind of, you know, downtrend forming. So we'll see. We will see. Guys, the EdgeFinder is free to use this week. We have that access ends March 31st for everyone. So if you've never used EdgeFinder before, it's the tool that I use in all my videos to share market analysis, what I'm watching. I use it every day for finding setups. And so too do a lot of great traders that come on this show, like our next show host, James from Elite Traders. So if you have not tried out the EdgeFinder, take 2 seconds. It is so easy to get access. Scan the QR code below my screen or click the link in the live stream chat to sign up for EdgeFinder Free Week. Take advantage of that, because that we don't do those very often. And when we do, we have thousands of people who try it out. And then next week, full transparency, we will be dropping a really big 4-year anniversary sale on EdgeFinder. 4 years ago, we launched the product to the public. And so we're really excited about that. So it is a really great opportunity to try it out for free this week, and then maybe get your hands on a copy at our super low prices next week. So buckle in. It's going to be a fun ride. Anyways, up next, we have Elite Traders' very own James taking over the stream just after this quick break. Stay tuned. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live. That's A1Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello, hello. How's everyone doing? Happy, what day is it? Wednesday. Happy Wednesday, everyone. Hope you're well. So, as Nick was saying, EdgeFinder free week. If you pick up the EdgeFinder for free, make sure you scan the QR code, the other QR code on the screen that's right now, or click the link that I'm sure will be dropped in the chat at some point to get a 100% free course. Basically covers how to use the EdgeFinder to find trade ideas, and then how to then take those trade ideas and execute them on the chart. It's a very similar strategy to what Nick and I trade. There's obviously differences, but it's based around the fib, trends, pullbacks, and structure. So, Phantom or Prizak, hello, hello. Check GPNZD, I caught breakout swing trade, backtest it 10 years of data, also Bank of England hawkish. What does that mean? So you caught a breakout trade. I'm not sure what your backtest thing is about. I'll have a look at some charts in a second. So I'm actually buying the pound Aussie. This is a bit of a change. I was actually very, very bearish not too long ago. Just a couple of weeks, I caught quite a nice short position. I've decided to now start buying back into the market. And there's a few reasons for this. So this is the weekly time frame. With a 200 Bollinger Band attached. So we've seen price break below the 200 Bollinger Band, the 200 moving average, which is the white line right here, and then start popping back to the upside. Very, very simple concept so far. The weekly time frame here, very oversold on the RSI, started to pop up again. If we go to the monthly, also oversold here on the RSI. And the whole idea behind this trade really is just a mean reversion rather than it being a typical swing trade. So I'm going in with more of a DCA type approach. Then if we move over to the EdgeFinder, we see GBP AUD is actually flipped from being what was very bearish into being actually a bullish score. So we've got a flip on the EdgeFinder from bearish to bullish. We've got a mean reversion idea on higher time frames. So overall, it's actually looking quite nice. So as you can see, we were very bearish for quite some time, basically all of 2026 so far. Pound Aussie's been a bearish reading, and it's now just flipped bullish with a score of 6. So I'm willing to give this one a go. As you saw, very, very small position size. It's only 0.01 for now. A few reasons. First of all, I don't really want to put too much risk on the table. Second of all, obviously the idea is to layer positions in and build a larger position over time rather than going in with one standard size position, if that makes sense. US dollar CAD, yeah, we can take a look at that. James is online. I am indeed. I appreciate the support. Check GPNZD. Okay, yeah, we can take a look at that. I did actually catch a little bit of Pound New Zealand, but it wasn't anything too crazy. So I caught basically this move here with sort of a DCA approach as well. Let me get rid of the Bollinger for now. Let's go back full screen. There we go. So we've been talking about the Pound New Zealand for a little while. I want to say a little while, I think over the past week or so. Let me change that color. Hold on. Can't see anything on there. There we go. So what we were talking about was this level of resistance through here. And my argument really was that there isn't a technical setup. Obviously, during this period here, there was nothing for us really to go from. So the entry criteria really would have just been this break, retest, and continuation. We did get that in sort of theory. We did obviously retest this level, wicks rejections to the downside. So overall, it was a break and retest, but it just wasn't enough. You know, it didn't give me what I needed, and I just didn't feel overly comfortable. However, moving forwards, I do still see this market as a good buy. I mean, we're still getting a good reading on the EdgeFinder for Pound New Zealand over here, very bullish with a score of +9. So I think buying dips is reasonable. In terms of targets, I'd be quite happy actually just to take it all the way back up to these previous highs here. So let's say 2.34 as a round number, I think is a completely fine target. So what we see on this left side is a lot of traffic, very aggressive candles. So generally in the FX markets, especially within the sort of G7, G10 markets, the very liquid currencies, these types of aggressive candles do get corrected. It's not 100% of the time, it's not every time, it's not guaranteed. But when we see this type of price action, it does make me start to think that we might see a little bit of a correction of that. So I ran a back test. Oh, sorry. I ran a GPNZD on Python. Ran a back test, got positive EV. Very nice. What was the strategy behind that, if you don't mind me asking? Jeremy, good to see you. Hope you're well. Yes, the Bank of England. That was the other thing, actually. I forgot to mention that with the GPAUD idea. We've obviously got the Bank of England that's pivoted hawkish. So we've got kind of not a complete flip, but obviously the idea that we were going off during this period was obviously we had that looks like a love heart. We had the hawkish RBA, we had a dovish Bank of England. Overall, everything just supported the Australian dollar, and almost everything was really against the sterling at that time. That's not really the case at the moment. So obviously, as I said, we've had the Bank of England flip or pivot hawkish. The RBA is, as far as I'm concerned, it's priced in. It's been priced in for a while now. So yeah, there's not really anything or any new catalyst to drive pound or drive the pound lower, really. And then obviously we've got the inflation idea with oil and things. AUD-NZD, I'm actually long on this one. So far, not a fantastic trade. However, given the current landscape, I'm pretty small size anyway. I mean, you can see 0.03, very, very minute sizing at the moment because I'm just not very... I don't feel very secure with the current conditions. Obviously, you know, Trump can tweet whatever at any time, and that can just flip the markets. So I'm happy to just sort of chill. I'll take some opportunities, low risk if they pop up, but I'm not overly interested in actually trading at the moment. So yeah, I'm long on the Pound New Zealand. Sorry, not the Pound New Zealand, on the Aussie New Zealand. The idea itself, I think, is completely fine. So we've got a really nice bullish trend here, obviously with the 50 and the 200 moving average. Price pulled into the fib, slightly broke below, but still held above the 200. We saw a pop to the upside, so that's where I decided to execute. However, yeah, I'm not overly optimistic, to be honest with you. So if we zoom out and look at, let's say, the weekly, it's very extended. I mean, the RSI was oversold. Overbought. We've come down a little bit now. But overall, this market, to me, is just really not ideal to continue buying. I think a mean reversion is a little bit overdue at this point, but the fundamentals are still supportive. So if we check the EdgeFinder, we can see Aussie, New Zealand. We are still getting a positive score of 5. It's not fantastic. It was much higher. Previously, it was a lot of much more of a solid idea, but it's still there. It's still getting a bullish reading. The technicals are also there. So what can you do? Take the trade, follow the rules. US dollar CAD. Yeah, we can take a look at that one. Due to rising inflation all around world, central banks are hawkish. Yeah, I mean, I wouldn't say they're all hawkish. I would say it's more a case of, yes, some have pivoted like the Bank of England, but it's more a case of like, well, you can't really take a dovish stance if, if oil's rallying. So that's the situation right now, which is also then providing a lack of trading opportunities as far as I'm concerned. Okay, so what was it? Dollar CAD you wanted to look at? Yeah, so bullish score in the EdgeFinder with a positive 6 reading, which is quite nice. However, technically, I'm not really a fan of this so far. So we've got a very clear downtrend. So we've got the high, lower high, and potentially another lower high here. We've also got a bearish trend on the daily. When we drop down to the H4, it's looking a little bit more optimistic. However, given the daily technicals, I'm not really interested in being a buyer. So I would need to see the daily flip bullish. I'd need then the H4 to sort of obviously continue bullish, and then maybe I could look for an opportunity. However, if you were a little bit more aggressive, I think maybe something like this. So wherever the next high will be printed, draw the fib from the low. So let's say low here. Let's just hypothetically say the next high will be printed here. Wait for this pullback and enter long within this fib zone here. In terms of take profits, I think actually, to be honest, if you are happy to hold a trade for a longer period of time, back up to these highs. So this would be, what would this be? I'll tell you what, let's just say 1.41 as a nice round number. I think it's reasonable, but again, I think it's a little bit too risky right now, given the technicals. And there is still the idea that the US dollar obviously is quite strong right now, but the Canadian dollar can strengthen very quickly if we get any escalations in Iran, we get any further sort of supply chain disruptions with oil. It could end up being quite a risky trade, depending on obviously the developments out there. Check Visa. Sure. What did you say? It's on a weekly 200. Yeah, it's coming into it. The thing is, as a macro trader, I can't justify buying stock. So technically, I actually would quite like to buy this, to be honest with you. But because I don't know anything about the stock, what can I really justify this position with? Well, we pulled back towards the 200 moving average. It's not really solid enough. But if you've got your reasons, then fine. Euro AUD. Yeah, so yeah, I think you are right. I think the situation we're in now is a little bit not the opposite. I don't want to say the opposite of what we've had. It's not. That's not quite accurate. But I do think obviously the Aussie dollar rally that we've had basically since the start of the year, this whole rally on the Euro Aussie, Pound Aussie, Aussie New Zealand. The Australian dollar has just been an absolute dominating force in 2026 so far. But the problem is that can change very quickly. So obviously we've got a few different aspects. We've got the idea that the RBA was the most hawkish central bank, and it might still be, but when you've then got other central banks or the majority of developed market central banks then pivoting towards holds and maybe even hikes, the advantage that the Australian dollar had backed by the RBA just isn't really the same situation anymore. I do think there is room for mean reversions in these markets, which is obviously what I'm positioning for in the Pound Aussie. Could obviously not work out. We could get something where we just pull up a little bit further and then continue lower. Absolutely could happen. But either way, I'm willing to take a little bit of a risk on that one. Also, my YouTube channel has just been dropped in the chat. If you could subscribe, it would help me out a lot. I post 2 to 3 times a week these days, and I'm trying to reach 10,000 subscribers. That would be fantastic. So yeah, drop a subscribe there if you wouldn't mind, if you're interested in learning a bit more about the way I trade. So what else do we have? Silver, interesting, is getting a bearish reading. So hold on. Let's get rid of the Bollinger Band. What can we find on silver? Let's start top down, start the weekly. Already, it's a big no for me. So when, again, a little tip for new EdgeFinder users that might have the free trial for this week. One big thing is this might sound really obvious, especially to any more experienced traders, but when you're looking at the EdgeFinder, it's very easy, especially when you're new to it and you've got all of these bullish and bearish readings. It's very, very easy to look at them and say, I'm going to buy all the bullish, I'm going to sell all the bearish. I may or may not have done that when I first got the EdgeFinder. But a big thing is obviously waiting for the technicals to also align. So what we've got on silver is kind of a great example of that not being the case. So silver is getting a bearish reading, and generally speaking, I would automatically then go to silver and start looking for short positions. But as soon as I look at this silver chart, I'm getting bullish technicals. So really, obviously, we've had a really fantastic rally on silver over the past few months. Then pull back towards our 50 moving average on the monthly time frame. Is this the monthly or is this the weekly? I think this might be the weekly time frame. Then we go to the daily, and we just had a really nice rejection off our daily 200 moving average and an oversold RSI down here. So it's making me a little bit cautious, especially about longer term holding, shorting silver. However, for short-term trades, I think there is some sort of idea somewhere here. So maybe you could look at this and say, okay, well, what we've got here, we've double topped. Price has then rejected our 50 moving average on the H4. We've also pulled in and showing rejections around our fib level, and the H4 is in a bearish trend. So there is arguments. Obviously, I'm not saying it's completely invalid. I'm just saying for me, I'm not really in a position where I feel comfortable shorting. I've just noticed as well, we have quite a nice level of structure through our fib. So this is actually quite a interesting break and retest. So obviously we've got previous structure through here. We have broken below, retesting here, and we also retested here as well. So if we can get 2 rejections, that's pretty good. And then if we can continue lower, obviously that would be a good sign to maybe either add into shorts or get short. But anyway, so to clarify, I know that was a bit of word vomit about silver, but to clarify, I would not want to be selling. I think what I would rather do is actually just not do anything on silver and wait for the EdgeFinder to flip bullish, and then I can start looking to buy again. So that's the plan at the moment on silver. What else do we have? So the yen is reading bearish, and I know Nick spoke about dollar yen and the intervention level, and I'm pretty much in the same camp. I don't really have anything to add on to that. The only sort of thought process I have when it comes to dollar yen and the yen in general is I don't think the MOF is going to intervene right at this previous all-time high. Let's just say 161. I think that would be kind of too obvious. So if we look at the history of the interventions and when they come and how they work, it's not normally at well, you can obviously put it down to a specific price level like 155, 160, but it's not a case of, okay, at 160, we can expect, or we can sort of say they will intervene, because it's also based on timing. So the Bank of Japan, sorry, not the Bank of Japan, the Ministry of Finance, which is who does the interventions, typically will do them during low liquidity environments or low liquidity periods. So that could be a US bank holiday, a US general holiday, whatever it may be. It's just when there's less money in the markets, they can move the market more with their intervention, if that makes sense. So I wouldn't expect this to be the intervention level. I kind of think we're going to start heading towards 162, 163, 165, and then that's where we might get that intervention. But, you know, no one knows. I can't tell you that for sure. So it's just my sort of best guess. So we are seeing a complete flip on the sterling, actually. So previously, the pound was getting a very, well, not a very bearish reading individually, but it's been getting a bearish reading pretty much across the board for the past couple of weeks. And we're now seeing that completely change. So pound Aussie, pound yen, pound Swiss, pound CAD, pound New Zealand, all getting bullish readings. So that's quite a nice sign that we might want to be just sort of buying the pound. That might, when you've got the same currency reading bullish or bearish on multiple things, so in multiple pairs like we've got here on the pound, it can be a good sign that the pound is structurally strong. It's not strong just relative to the quote currency, if that makes sense. So I think I would stay away from pound dollar at the moment. I think the situation with pound dollar isn't ideal. So yes, we've got obviously sterling strength, but we've also got US dollar strength. So right now, I think pound dollar is more a tug of war type environment, whereas things like pound Aussie, pound New Zealand, I think we do have quite significant room to the upside. I'm also short on euro dollar. So my euro dollar shorts are, again, a DCA sort of approach. I've flipped between different positions on euro dollar. So I was DCA, then I closed that, entered a swing, then closed that, and then restarted DCA. There wasn't really any particular reason, to be honest. So my swing position was stopped at break even. So I decided, you know what, let's go back in with a DCA. So with euro dollar reading bearish with -8, I'm completely fine to just continue adding into short positions as long as we stay within this bearish trend. If we start breaking higher, then I'll cut the trade and call it a day. But so far, it's pretty smooth. So the beautiful thing about shorting euro dollar like this when you DCA is the swaps. So as long as you're not oversizing and you can handle any drawdown that might come, obviously with your position sizing, you can essentially just get paid for as long as you're holding with the swaps. So it's yeah, fantastic, really, just to sit in short positions. Moving forwards, how much time do I have left? I've got about 10 minutes. And who's on after me? Let's see. Alan Perez is on after me. Okay. So we covered silver, we covered euro dollar. New Zealand US dollar is also one that I would quite like to get into. I think I've missed the opportunity, unfortunately. So this is kind of what I wanted to do or wanted to get in on, but I just didn't manage to do it. So similar idea. Fib from the high to the low of this bearish leg, price pulls back into the fib zone. This zone also lines up with previous structure, and then we see this rejection. That's the whole concept of my sort of technical approach, really. Of course, with the bearish trend. So with that said, there's not much for me to do at this time because we are just sort of sideways within this range now. So I'd need to now see price break lower or return back into this fib level. Then I could maybe consider getting short. But yeah, whilst we're still inside this this sideways consolidation, I just can't do anything here. That's strange. I was looking at the chat and didn't see anything. I look up and there's loads of messages coming in. Hold on, let me just catch up. Where was I? So check NZD USD. I'm still short. Yeah, well, there you go. So I do still think shorts are a good idea. It's more just a case of where do you want to get in. I mean, I just covered the technical, so I won't do it again. But I think really you'd need to wait for a pullback into the fib again, or you need to see a new low get printed, and then you could obviously redraw your fib if you trade with fibs. Would you ever long something that's bearish on the EdgeFinder? No, not unless I've got a very, very, very solid reason to. So one example of that would be like a geopolitical shock. So we should all be aware that a geopolitical event or a geopolitical shock overrides pretty much every fundamental. In fact, every fundamental, I would say. So unless there was something like that, like a black swan type event, then no. I have done previously where I've counter traded the EdgeFinder because I saw something that the, you know, whatever it may be. The majority of the time, the EdgeFinder wins, which is obvious. I mean, the EdgeFinder is built on fundamental data. So yeah, I just don't see. I don't think it's worth it. Could you also share your trading view candle settings, like your candle colors? I can. I'll leave this on screen for a second. So, the body is the same as the boards and wicks, but 50% opacity. So I'll pull up this. The white is obviously just white, but this is the blue. Can you check euro dollar? Yeah, I mean, I've just showed euro dollar, but we can go over it quickly again. New Zealand US dollar is waiting to drop. Yeah, I think the US dollar still has strength. Or sorry, still has further strength, I think. James, what's your thoughts on Euro New Zealand? Okay, Euro New Zealand. I don't think, is there anything here? There's nothing on the EdgeFinder, so automatically I'm going to nothing. However, I think, to be honest, if you were wanting to trade New Zealand dollar, pound New Zealand is probably the better approach because that is getting a bullish reading. In this case, the technicals are very similar, but we don't have the EdgeFinder reading. So the weekly looks pretty nice here. Really nice rejections of the 50 weekly moving average. The daily looks okay. I mean, obviously bullish trend. We had a bit of a convergence here, broke below the 200 daily moving average, resistance for a little while, and finally broke back above. So it does show us that we do have some buying interest in this market. The H4 is also just flipped bullish. So on a technical basis, I like it. But again, it's just the EdgeFinder's not giving me a reading, so I can't really justify it. But as I said, pound New Zealand is getting a bullish reading. So I think that is probably the better approach. You were saying that earlier. I'm not sure what you were saying earlier. Got no idea what you're talking about. CAD yen. CAD yen. I don't think I really have anything here. Let's just see. So what's this? Daily H4. Yeah, the H4 looks quite nice, actually. I've not really paid any attention, but yeah, resistance over here. Break, sort of retest into the 200 moving average. Another retest here. So how would I want to go about this? Maybe if we could get a daily bullish candle close off this level on a technical basis, maybe could warrant going long. But yeah, with the EdgeFinder not giving me any readings again, I'm actually flat. But I with the trend, I think bullish. Euro dollar's falling. Oops, that's not what I wanted. There we go. Yeah, it's having a little move to the downside here, which is nice. Really what we need to see is these lows start getting cleared. So if we can break this sort of trend line, if you will, clear out these lows, that would be sort of the ideal situation. And then we can see euro dollar, in my opinion, likely start coming to correct some of this left side over here between these two levels. It's always changing my layout. Yeah, I know. I don't know why. Maybe it's just I don't know. I don't like to just have the same chart set up and colors all the time. I get a bit bored of looking at it. Thoughts on pound CAD? Pound CAD I'm bullish on, actually. So as I said, pound CAD reading bullish with a score of 7. We unfortunately, well, I'm saying I unfortunately have missed this because ideally I would have liked to have been long down here. Obviously I couldn't do that because my strategy wasn't valid. But what I would have wanted to sort of trade in terms of technicals is this left side. So when we had oil rallying, we obviously saw the Canadian dollar gaining strength. That left a lot of aggressive downside on things like pound CAD and euro CAD. So my idea would have been to sort of trade the correction of that, which we haven't. We've had, and I missed it. Beyond that, let's see, what do we have higher time frame wise? The weekly looks good. Really nice bullish trend here. Nice push to the upside on the past weekly candle and the current weekly candle. Daily doesn't have anything, actually pretty much flat in terms of the technicals. I don't see anything interesting there. The H4 maybe could be something like this. So it looks like we're about to have these EMAs crossing. So if we get a pullback here within the fib and then a rejection to the upside, I think, yes, maybe we could continue higher. Again, pairing that with the EdgeFinder bullish reading. So that's kind of the idea I've got, but realistically, there's nothing here for me just yet anyway. Maybe it changes itself. Hi, Nick, if you enter a trade based on EdgeFinder, and you're still around the entry, what we do if the price changes? Well, I'm not Nick, so I can't give you Nick's answer, but I can give you my answer. My answer is simple. If it's break even and the EdgeFinder's flipped, I'll close it at break even. The more I've used the EdgeFinder, the more it's become integrated with my strategy and the way I trade and the way I manage trades. So it's almost like a filter. So let's say, well, as you said, if it's at break even and it flips, then that's my signal to get out. Excuse me. Same thing for pound AUD. So let's just go here and I'll show you an example. Excuse me. some reason. Oh, there we go. So let's say, obviously, pound Australian right now is getting a bullish reading. So let's say we rallied up. As soon as it flips, I'll very likely get out of the position and realize the profits, unless there's some sort of reason that I think it can continue higher or whatever it may be. But generally speaking, my rule is that if the EdgeFinder flips, I will flip as well. And there you go. That is the link for the free course. So I go over trade discovery with the EdgeFinder, looking at the fundamentals, how to use it, and then how to take that bias into the charts. And you get the full framework from that. So if you would like it, it's 100% free, no strings, no strings attached, and you also get quite a hefty discount on the EdgeFinder if you do have that course. Guys, I will see you all soon. Don't go anywhere. You've got the one and only Alan Perez coming to take over the show. Guys, have a good one. Stay safe and don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Sorry, I was dying of thirst, and my straw fell out of my awala. All right. Hope everyone is having a good morning here today. Thank you guys so much for sticking around here. I'm very excited for today's segment. I'm going to be doing a little bit of live homework here today. So there's, in my personal view, I think there is a more real possibility that you have some kind of a de-escalation in the Middle East. And so you had essentially a landscape where there was one side willing to talk and the other one was just clearly rejecting or just clearly throwing that away. And what I mean by that is like the US was, saying there was going to be peace or whatever. And then Iran was essentially saying, you know what, like they reached out, but we're not talking back or whatever. And there are still some comments going around like, like this one that just came in a minute before I came on. Iran will end the war at its own choosing and stuff like that. So there's still some back and forth, but now the conversation loop has opened a little bit. And so you're starting to see some communications from both sides. And, my personal view is that like, if they're having open conversations and stuff like that, then most likely there will be a de-escalation or something, a ceasefire on the horizon. Do I know when? Absolutely not. And I'm not trying to claim that, but I do think that it's more of a real possibility now. And just, some of my intuition and previous experiences, like I didn't trade 2008 or nothing like that, but I was around, the most recent one being like the April tariff stuff, super volatile time too. But then you had, one person come to the table to talk. I think it was India. And then it just followed through with that. And very soon thereafter, you saw some kind of a de-escalation. So again, I don't know it's going to happen for sure this week or next week or nothing like that. But what I want to achieve during this live stream here is essentially know what trades I'm going to be taking if that happens, just so that I am ready for it. I can flip my position at a moment's notice and I don't waste that time, and I can try to ride whatever move it is as soon as possible. And then that's kind of my job here, is because I take a reactive approach when it comes to trading. So I'm definitely going ahead and I'll pretty much, just think out loud here with you guys. And of course, if you have any questions or anything like that, feel free to drop those into the comments. But we'll go ahead and start off here. I'll start with the comment section here today. Alan, are you in NU shorts? I am. So I'm in drawdown here with the euro dollar position. You can see here for transparent purposes, I'm down overall about $600 across all positions. So I'm down here on the euro dollar here. And I'm in profit here on the New Zealand dollar, slightly, ever so slightly. And then I do have New Zealand yen to the downside. But I'm going to go ahead and go over everything here, all of the possibilities that I'm definitely looking for here in real time. And I think it's actually really cool. So I'm going to be using the EdgeFinder. And the opportunity here is for those that have the EdgeFinder, perfect. You can kind of just see how I use it. And I know everyone uses it differently. But for those that have not bought the EdgeFinder, you do have the opportunity to try it for free. So I definitely encourage you that you get it if you don't have it now, and then just kind of go with me here along the line. So morning. Gosh, so hard trading this. I chickened out and used shorts yesterday after the ceasefire. Yes, Luggy. So I'm in a little bit of profit, but I'm not in deep profit by any means. And so the purpose of this live stream here is just going over all of the possibilities, because there's a chance that I get stopped out here, and if I do, I want to be able to flip as soon as possible. So let's go ahead and start with the obvious, which is the current trade at the moment, right? The easy trade, if you will. And there's no easy trade, but the more obvious one, which is long dollar if there's an escalation, right? So if you start to see Iran doesn't want to talk, or just continued efforts of like no progress at all, then you will see oil higher, you will see yields higher, and you will see the dollar higher. That's the obvious, right? We all know that so far for now. Gold lower too, equities lower too. So that's kind of what I'm positioned for now. But if you were to get some kind of a ceasefire, a solidified one where both sides agree to that, then you will start to see some price flips. And so in that case, the most likely scenario is that markets start pricing out what they were pricing in originally, which was global central banks hiking rates, things like that. So the initial move, I would assume, would be dollar softness. So dollar, pulls back. How far? I don't know, but that's why we use technicals for that portion. So if you do get a de-escalation, I'm going to see dollar weakening. So the idea is that I can manage my current trades and trim my stop losses as soon as I can. So what I would probably do after the end of this stream was just bring this here lower and just trail until it is essentially as low risk as I possibly can make it in the event that the dollar softens there. But I do think that longer term, and what do I do after that immediate reaction is kind of what I'm trying to achieve this stream. So let's go ahead and break that down. So when I look for trade possibilities and setups, I try to look for clear opposite ends of the spectrum. And what I mean by that is a super strong currency against a super weak currency. The bigger the gap you have in that relationship, the better the trade setup. And I want to also look at underlying conditions, right? So, and also perceived forward-looking projections. So underlying conditions, what I mean by that is an already strong economy. So where my mind takes me right now is the Australian dollar. And what I mean by perceived forward-looking projections is, what does that economy, for example, Australian dollar, want to do with their interest rates moving forward, right? So, they're looking to hike rates. So that's something that's on my mind versus something like the New Zealand dollar or the Kiwi, weak underlying, sentiment, whatever, or weak underlying financial conditions, and they're looking to either stay neutral or lower their rates. So that's kind of where my mind takes me, right? And also, too, I need to be mindful of third, the currency roles, right? What does each currency do? Some currencies are risk-on currencies. Some are tied to commodities. Some are safe havens, things like that, right? And then, lastly, or not lastly, but the fourth option would be the cost of doing business. So I definitely, I'm mindful of the carry trade. What's going to be my cost for holding the position if I swing trade for a long period of time. And then lastly, and this is not, some of you guys might be surprised by this, but lastly, the technicals is the last thing I look for. So I try to make sure that I kind of knock all of those things down from a fundamental and sentiment perspective, and then the technicals is the last thing. So all right, let's go ahead and get started here. So if dollar softens here, I do think that there's going to be a little bit of a pop to the downside. But then what do you do looking forward, right? So essentially, what would I be trading if none of this was happening right now? If we were just trading back to the previous fundamentals. So what I would do, I'll go to the EdgeFinder here. I'll go to the macro scanners, and I'll just look at where everyone is against each other. So essentially, you have the dollar, which is pretty strong here. AUD, you can see that it's popping here lower, and so I'm actually curious about that. New Zealand dollar is weak as well, so the Swiss basket is weak as well. So that actually makes a lot of sense. So essentially, what I'm getting at is, what I'll look to do is look to buy the dollar on any dips. And so the way I would do that is by going to the top setups page and I'm going to I'm going to take away neutral readings. And I'm going to look at this. So buying dips on dollar yen, buying dips on or selling pops on the euro dollar, selling pops on Kiwi dollar, buying dips on dollar CAD, which makes sense too, because if once the move happens, you do have the Canadian dollar, which is a little bit weak, especially if oil comes down, and then you can kind of catch the dip on dollar CAD. So I like that. So I'm actually going to write this down here. I'm going to try to buy dollar yen. That one I have to be cautious for because of the intervention risk. So that one would probably be the least prioritized. So dollar yen, dollar CAD to the long side, shorting euro dollar, and shorting Kiwi dollar. Okay, so I have an idea now. Now, essentially, what I'm going to do here is essentially rank them, right? So we'll go down the list and see what the current score is for now. And obviously, this is going to change as the time progresses. But euro dollar is getting a -8 score, so I like that one. And all of the ones that I just spoke about are getting a good score there. So Kiwi dollar, it's good. Dollar CAD, dollar yen are also pretty good as well. Dollar yen here bullish, and then dollar CAD bullish as well. So they're all bullish here. So now the underlying currencies that we're trading is essentially the dollar, the yen, the CAD, euro, and the Kiwi. So now what I'm going to do is look for forward-looking projections about those certain asset classes and see if we get some interesting thing that we see. So let's go to economic data, interest rate projections. Essentially, what I'm looking for is anyone going to be elevated for longer than the others? Is someone going to be cutting rates more aggressively? Essentially, that's what I'm trying to look for. So CAD is something that was on the list. Euro, pounds not on the list. Yen's on the list. I'm actually going to exclude yen just because that intervention risk. I'm going to put that one in last. Okay, so noticeably here, I do see that the Canadian dollar here, that yellow bar, is looking to get weaker over time versus the green bar here, the euro is looking to stay flat. So maybe I prioritize the Canadian dollar a little bit more. And then you look at New Zealand dollar. New Zealand dollar is actually looking to pick up a little bit there. So the top on my list is going to be dollar CAD to the long side after that initial reaction. So dollar CAD to the upside, or that's going to be my number one. Now, at the moment, from a fundamental perspective, you do see that the Kiwi dollar is getting a very bearish rating. So that one would probably be number 2 there. So Kiwi dollar to the downside would be number 2. And then what else do I have on my list? Euro dollar. I do like euro dollar. Euro dollar is going to get pretty flat there. So I'm going to make euro dollar 2 instead of Kiwi dollar. Because Kiwi is trying to raise a little bit, and euro dollar is just trying to fight to stay flat. So euro dollar is going to be 2, and Kiwi dollar is going to be number 3. And then dollar CAD. Okay, so we're going to ignore the yen. So now what we do is go to the technicals and see the possibilities of what can happen. So I'm going to erase essentially what I got here. And then, if you do get a pop in the dollar, these things will get a short-lived pop, but I'm ultimately looking to fade it. So I'm going to put alert here. I'm actually going to put some boxes just to make the illustration a little bit easy on the eyes there. For euro dollar, maybe we get a pop into this 200-day moving average, and I'm just going to put this in red because I'm looking to short it right there, or ultimately something like right here. That's where I'm looking to short the euro dollar. I think longer term, dollar comes out winning there. Dollar economy has been more resilient than the euro, so that's what I'm looking to bet on. So that's essentially my levels here for the euro dollar. And then you want to look at the Kiwi dollar. This is a little bit more difficult chart to navigate as well because the technicals are a little bit all over the place. I'm going to rather look at this from a weekly time frame perspective. So Kiwi, I kind of like somewhere right here. So I see some interaction happening right here. And if I go to a 4-hour time frame, that's the 50-day moving average, and you see this was some support here and some resistance. So I'm going to make this a little bit wider there. Again, I'm not going to be perfect on the entry, but this is essentially my sales zone for the Kiwi if you do get that pop. So this is where I think you can kind of get a feel for some premium there. All right, dollar CAD next. Dollar CAD to the long side is what I'm trying to achieve here. You are getting a breakout there. So essentially with dollar CAD, I'm actually open to something like this. If you get a retest back into here, depending on how deep that pullback is, that first level that I'm looking to buy is at 1.3700, and then even 1.3500 if we get that low. That's kind of, that's kind of a long ways away. If I measure that move out here, that's going to be about 250 pips. So we'll see. We'll see if the better, the deeper the pullback, the better. And if I put a Fibonacci retracement level, let's say assuming that this thing stops right here, you could also shoot for somewhere in the 61.8, maybe like right here at 1.36500. So that's that. Now we have to address the cost of doing business for the trades. So let's go to carry trade scanner. And we're going to do, because they all contain US dollar, we're going to make it simple and just type in USD here. And then you have, so if I'm trying to go euro dollar short, I'm getting positive carry. If I'm trying to go Kiwi dollar short, positive carry there. And if I'm trying to go long dollar CAD, that's positive carry there. So I can do a couple things. I can find which one looks the best from a technical perspective and go heavy on that one, or I can spread my risk out on all of them to achieve a 1 or 2% risk on the entire account, and then I'll be collecting those positive swaps. And that is how simple I truly try to navigate the market and filter things out and go at it really, really quick with the EdgeFinder instead of doing it by hand. Hello, Marco.
Yo, what's up?
Very good, man. Let's talk about some Aussie dollar with the CPI getting weaker than expected, which you were kind of right on the ball with that. Does that change your overall outlook there?
I mean, Aussie dollar. So I sent you an excerpt yesterday from Brent Donnelly. It was a bearish one. So if I bring it out here.
Yeah, it was a good read.
So, I mean, he's like a veteran trader in the Forex markets, and he mentioned in the piece that he is very much bearish. Like there's a lot of confluences that makes him bearish. And I've been reading his stuff for a while now. It's not that often that he goes super bearish on something. So for me, I'm definitely bearish AU. To what level? Well, not sure as far as levels go, but I think, let's see. Maybe if we take this whole move, let me try that, take some fibs.
Yeah. I'm with you too though, Marco. Like I was essentially right now doing a rapid fire rundown as to how I filter trade setups, especially if you do get some kind of a ceasefire. I want to be prepared for that and not have to waste time and just be on the ball and be on the move early if you do see some repricing and some moves in the opposite direction. Originally I was like, CPA came in soft. They came at 3.7%, which is only 10 basis points lower than 3.8 where they're at. But still, I was like, maybe the Aussie dollar is getting a little bit of a lift there. But actually, you had the unemployment rate over there for them come out worse. Now you have CPI coming cool. So I was kind of going down the list. And I always start off when it comes to my personal trading with the equal surprise index, because I just want to gauge where everyone else is against each other. And the Aussie dollar was being like the highest score or the second highest, and now it is the third lowest at 33% here. So that needle moved very, very fast.
Can we see it on the lines?
Yeah. So I can actually here. I'll just do here. I'm gonna take some of these off here just to make it easy on the eyes. I'm going to keep on dollar, Kiwi, Euro, and Aussie. Aussie being this one in blue here. You can see that it was elevated at the top for a good while. Now it just dropped all the way here very, very fast. And you can see that reflected with the price action. I mean, and that is the beauty about the EdgeFinder, because the release came out like a couple hours ago in the middle of the night. And you can see that updated there quick. Now, granted, if I didn't have this and if I didn't have your Brent Donnelly article that you sent me and a lot of these tools, I would have probably been still stuck in the Aussie dollar long theme, and I would have been wrong, and that would have been an unnecessary loss. So essentially, what I'm getting at is I just did like a rapid fire thing of what I'm looking to trade if stuff starts to shift, and the Aussie dollar was not on that list. So
and how did inflation come out? I think Brent Donnelly mentioned something about a cooler inflation print. If I remember that correctly.
Yeah, it came out at 3.7. I read this morning because I did like a chart markup post for that one today. Let's see, interest rate data, or no, inflation data, CPI, and you go to Aussie.
Yeah, CPI
at
a bit cooler. a bit cooler.
3.7. Mm-hmm.
Yeah, I have it on my Forex Factory here. So looks like he was right about a cooler inflation print, which there's a measure actually for the audience. Essentially, there's a measure in Australia that prints out the inflation before the official CPI print. And it's a great forecast tool for the CPI inflation. And that measurement came in, I think, maybe a couple of days ago, came in cooler than expected. So now CPI followed, came in cooler than expected as well. So as far as levels go, I think we can go to 0.5 for sure. If we could go to 618, that would be awesome as well for any shorts out there. But 0.5, I think can be hit. So 68000, that's I think a pretty good level right there. For any trade structuring, if you sell here, put your stop loss above the 20 MA, target the 0.5. So the reward to risk is positive. So I think it should be fine. By the way, I also closed my Euro Swiss position
Okay.
like a couple of seconds ago. Essentially, we have moved quite far away from my intervention level. So I want to secure some profits, and I'm betting on Euro weakness because of the oil crisis, because the ECB will hike into an oil crisis, which from my research is bearish. So I've secured profits, but if we approach the level back again, I'll be pretty happy to re-enter because 0.9 level, I think it's just going to get defended. So if I can grab more trades such as this one, just keep on slapping longs around 0.9 and taking profits, I think that's a pretty sort of steady income approach. But yeah, I'm out of this one. Still in oil, still in UJ, which is now going back to break even actually, and still in an EU short. I think we saw some news. So yeah, Iran will not accept a ceasefire or enter into this process with a party that has violated its agreements. Looks like Trump is completely lying. What do you think?
I think that you're coming from a place where there was no willingness to talk at all from Iran's side, and
Okay.
now they Trump said they've been talking whatever, and then now they're saying, well, we're receiving your messages and now we're willing to look at them. And I think that's a step in the right direction.
Okay.
And I think that they wouldn't really voice that if they weren't open to some kind of a negotiation or a ceasefire. Now, maybe the deal or the requests are very extreme and it may take a long time to achieve that or whatever. But I do think that is a step in the right direction. And like my mind takes me to the initial like Trump tariff, April 2nd sell off, all of this thing, super volatile, whatever. And it was really hard. And it was again, one-sided communication or one-sided promises. And then you had the first country, which was India, come in, and then the UK came in. And from there, there was really no solidified like agreement or anything, but the market just saw that as positive, and they started repricing out those moves there. And I think you may see some kind of that as well. So do I know exactly when there's going to be a ceasefire? Absolutely not. But I do think that it's more realistic or more probable that there will be one. And that's the caveat in that is that I wish I had the timing, crystal ball there, but I don't.
Yeah. And which positions are you currently running, or are you currently flat?
Yeah. So I'm net losing $600. I'm in the euro dollar short, Kiwi dollar short. Kiwi dollar is barely in profit, and I'm in Kiwi yen short as well. And so essentially I was kind of preparing myself for what am I going to do if you do get that ceasefire. And I was essentially going through the underlying fundamentals, the roles of the currencies, things like that. And I do think that you do get a short-term short-term fall in the dollar as you price out that safe haven stuff. But then ultimately, moving past that, what would be the fundamental drivers, moving the currencies and stuff like that. And it's central bank policy, right? So essentially looking at rate projections for Euro, for Japan, for Canada, all that good stuff. Canada's looking to lower rates more than the others. So I would probably be looking to buy dollar CAD on dips. And that makes sense too, because from a currency role perspective, the Canadian dollar tied to oil, if you do get a de-escalation, oil goes down, Canadian dollar goes down as well. So I'm looking to buy a dollar CAD on pips because US is looking to lower rates, but they're going to be pretty much flat while Canadian dollar is looking to lower. So, that rate divergence gap is going to be pretty steady there. I'm looking to also short the euro on pops and short Kiwi dollar on pops. So the only thing is I'm already in those two positions, short euro and short Kiwi. So what I would do is take for now is try to reduce my risk as much as I possibly can in the now term. That way, if you do get that pop, the risk is less. I can get out of it and I can wait for a short opportunity. I'm looking at this 200-day moving average here for the euro to short it at 1.6800 or even 1.17800 here at the top of this range here, or anywhere up here. For Kiwi dollar, what I'm looking to short is I think 0.5900 or 0.59400 will be a premium. You do have that 50-day moving average here, and you also have like this microstructure on the 4-hour. If you break past that, perfectly fine. That's better for me. Then I can try to short from the 0.6100 level.
I like the USD CAD long idea. Let me just see something. So if I go to the rate probability website, so let's go to central bank forecasts, Bank of Canada. Okay. I mean, on my website here, it says that they're actually looking to hike, but maybe this is wrong. So I'm not sure if this website is 100% accurate, but current rate 2.25, December 2026, 3.04. Where did you get your interest rate projections?
Yeah, we can flip that to my screen here. I was looking at the EdgeFinder's interest rate projections.
Okay.
I have dollar, Kiwi, CAD, euro. We'll go ahead and take away, we'll just leave it like this, how it is. So the dollar here in blue is looking to reduce its interest rates. However, they're starting from a higher vantage point versus the Canadian dollar here in yellow. We're right here, Q1 2026 here in yellow, Q2 2026 the same, but looking at Q3 and Q4, the yellow bar is going to be a little bit lower there. So that's kind of what I'm betting on here. Most other central banks are also trying to achieve that besides Kiwi. So Kiwi is actually looking to possibly raise rates there. So that's why I'm kind of prioritizing dollar CAD. So if I'm using the EdgeFinder, you're free to use whatever source you want there, but I do like the idea that this thing kind of trades lower there, especially to giving the currency rolls where you have the Canadian dollar tied to oil. If you do get a de-escalation, a fall in oil, then that would be good for dollar CAD to the upside.
Yeah. The website I'm using is absolutely free, and I'm not sure about its accuracy. It should be looking at some sort of a futures market with pricing in interest rates, but I'm not exactly sure what is the source. I mean, the best website for that for the US is, of course, the Fed Watch tool, but we don't have the Fed Watch tool for the other countries. Unfortunately.
So it's okay. If I take my screen here too, from the Canadian dollar, I'm not a central banker by any means or nothing like that. Here, let me put my screen on there. At this stage. Okay, there you go. I'm not a central banker by any means, right? But looking at the Canadian dollar CPI there, I would assume that they are in a good position to allow this short-term inflationary pressure to just pass through. But just looking at their current CPI here at 1.8%, it is below their target rate. So maybe they're kind of in the position where, when the time is right, they can go ahead. They already have that CPI, which is low there, giving them the green light to go ahead and cut interest rates. So, but again, different sources say different things, but I'm kind of just relying here on this one.
Yeah, cool. I like USD CAD up. Definitely. Let me just look at the chart one more time on USD CAD. So let's find it here on the list. Yeah, looks nice. Already starting to tick higher. We broke a key level of resistance there. What does the EdgeFinder say? USD CAD. Okay, bullish reading as well. Not bad. Did you mention which levels you're looking at, or are you still kind of monitoring the situation on that?
Yes, definitely. So I'm here on the daily time frame. You do have a potential level of resistance that you're looking to run into here, potentially here at that 200-day moving average here in yellow. So that's something that I'm looking for. Dollar CAD has been somewhat range bound. So my two levels is we were trading in this range. We broke out of this level of what I thought could be resistance, now potentially support. So if you get let's see if the epic pin works today. If not, I already know how to fix it, but no. Okay, I'm
You
just
have
gonna
some
use
sort of a pen?
yeah, the epic pen, but it seems to glitch out. I'm just gonna use this one here. So if you get a pullback here in dollar CAD into this level of resistance, that's a buy opportunity potential, right, to the upside. Or if you somehow find your way down to the bottom end of this range here, I'm also looking to go ahead and pick it up there. Depending on the environment that we're in, the deep pullback and stuff like that, there's a lot of nuances and stuff like that. Then maybe I probably take the approach where I put half a position up here at this first level and open to buy another one here. That's a possibility as well. I can also take the approach of Fibonacci retracement levels, assuming that this thing stops right here. You can buy at the 50 or the 61.8. There's a lot of ways you can approach it. But I like dollar CAD to the upside too. You're getting positive stops as well, which is a big thing for me. Is I try to reduce my cost of doing business as much as possible. And so the positive swaps for dollar CAD is looking good. And then also the possibility that they improve because Canadian dollar is trying to, lower rates per EdgeFinder. I like that idea.
Cool. What's your take on the S&P? We had a pretty nice push up on Monday. It doesn't seem to be continuing with the same force that we saw on Monday. We have hit definitely a level of support. So what do you think about it?
Yeah, it's like you say, the characteristics are still iffy. You're still below that 200-day moving average, which is a big deal. A lot of people look at the 200-day moving average when you're thinking institutions, all this other stuff. From a high level, the 200-day moving average is a worthwhile indicator to look at. So we're still below it. So I think that markets are essentially using that as a ceiling. Right now we'll probably be trading between the 200-day moving average and that 6,400 level, unless something dramatic changes in either direction, the escalation or de-escalation. But not too hot though. I would be scared to buy it now prematurely without knowing really, if we're getting improvements or not in the Middle East.
Yep. I agree. I mean, the first indice I would look at is the Nikkei. So as I mentioned, I think I talked about it yesterday. So Nikkei is now on the watch list, and if I get any sort of a confirmation from Iran that there's going to be de-escalation, I'm going to jump in along here. I mean, for now, it's all words. Words are cheap. Actions are what matters. So unless I can see some actual actions on both sides, especially Iran's side, that are leading to a de-escalation, that's going to be definitely something that flips my bias. For now, words are cheap. Trump can talk all he wants. Iran can talk all they want. I'm just positioned risk off and sticking with the narrative until I see some clear sort of a shift in the actions. And also, what doesn't help, Trump seems to be sending more and more troops into the area, which is actions. That's not words. That's actually actions, which lead to, unfortunately, more of an escalation in my head.
I do see here very obvious that the Nikkei from a technical perspective is taking it a lot better than the S&P 500. See that it's staying above that 200-day moving average. It's staying quite resilient in that sense. So I think that's the better winner in my opinion. If you do get that risk on flip, I do like the Nikkei, as you say. Mark, I'm going to go ahead and head out here for my portion of the segment. I think you have the DNA funded challenge here, and I do have to run here, but quick pulse check here on the chat for my section of my segment. If you guys like that rapid fire, that was the kind of first time I did that here, that real time homework. I don't know if it was good or not. I would like the feedback here. That way I'm kind of, giving you guys the best I possibly can. But yeah, and also too, Telegram channel as well, completely free to join. EdgeFinder is free for this week as well. So definitely grab yourself a copy of that and avoid those unnecessary losses. For example, in my case, the Australian dollar, I was kind of, biased in that sense, but now after Marco, your Brent Donnelly post that you sent me yesterday and seeing that the fundamentals have shifted against it, I'm going to avoid that one for now. But thank you so much, Marco. And we'll talk tomorrow.
Thank you as well. This was a great session, and I'll see you tomorrow.
All right, my friend. Take it easy. Bye-bye.
You too. See you. Goodbye. I want to post the link to the giveaway. So if you want to participate in the DNA funded giveaway, there is a form you need to fill out, and you can find the link to the form in the comment section. So check out the comment section. It's a jot form. Fill it out, and you'll get entered into a DNA funded giveaway. Now, if you want to get funded immediately or start a challenge immediately, definitely do check out DNA Funded with the code A1Live, which gets you 25% off any DNA funded challenge. So code A1Live. This is my personal 25K two-phase account. I've passed the phase 1. Now it's on to phase 2. I'm up $300 and trying to get to the profit target, then of course aiming for a payout. I've had a great experience so far. There's a big broker behind this company, and yeah, it's a safe play. I mean, in the space, there's a lot of shady companies, a lot of shady firms. They give you 70, maybe even 80% discounts. Those are scams. There's a couple of good prop firms out there, such as FTMO, E8 Markets, 5%ers, which have been in the space for quite a long time. DNA Funded is one of them, and with the code A1Live, you get the best price possible. Okay, so you get a good prop firm, you get a good price as well. Now, I saw a question from BPM. Hey, Marco, can you send the link to that Brent Donnelly article? Unfortunately, I can't. It is a paid newsletter. But if you want to sign up for the newsletter, just go to Brent Donnelly. Spectra Markets is the name of his website, and you can sign up for 1 month, see if you like it. For me, it's an absolute game changer. Like EdgeFinder, absolute game changer. Brent Donnelly, absolute game changer. Andrew Campbell, not a game changer for now, but maybe in the future. Like, it's this new guy I'm following, and he does a lot of analysis on oil. He does a lot of analysis on gold and stocks. So I'll see what he has to say in the future. I know he's long oil at the moment, so I'm kind of with him on that because I'm long oil as well. If we go to Financial Juice, so you're seeing a lot of conflicting evidence here. For example, you have Trump on Iran. I have instructed the Department of War to postpone all military strikes. And then you see US to order 3,000 soldiers to the Middle East. This is talk, and these are actions. You know, so it's word against actions. US-Iran may hold high-level talks as soon as Thursday. This is just talk. Ceasefire, again, just talk. Iran will not accept the ceasefire or enter into this process with a party that has violated its agreements. Looks like someone is lying. It's either Trump or it's Iran. I don't trust neither. And then you also had, where was that? Preparations for potential use of ground troops. That's actions right there. I'm positioned for that sort of an ending, or not ending, but unfortunately a prolonged conflict. So I have exited Euro Swiss. I'm still in US oil, still selling UJ as a hedge against my sell on euro dollar. Okay, so free trades at the moment. If something happens, if we get an actual development, actual resolution, Nikkei is the first thing I'm looking to buy. If you remember, I was long on the Nikkei before the war started. The war started, took me out of my position. I would love to re-enter that. I think it was a good trade. And I would target all-time highs. Absolutely. I think we can go to all-time highs. Before I continue, I just want to post the link to the giveaway form one more time. If you haven't signed up yet and you want to get a free 10K one-phase DNA account, you can find the link to the form in the chat, fill it out, and you will get entered into a giveaway. So why do I like the Nikkei so much? First, you have the new prime minister. She is dovish. Second, you have the new Japanese government. Super dovish with the prime minister. Third thing, you have less taxes. I think tax cuts for companies. So you're getting tax cuts for companies. You're getting capital going into Japan, and you're getting the erosion of the carry trade on USD JPY because the Bank of Japan is expected to raise interest rates in the future. This ruins the carry trade. This makes capital, this brings back capital from the US back into Japan. Where will that capital go? Some of it will go to the Nikkei. So a lot of things are pointing higher for the Nikkei. The only problem right now is this war. This war is not letting the stock market appreciate any higher. So yeah, that's kind of what is happening at the moment. Gold is going up. Possibly has been oversold. I mean, we have just been selling off like crazy. Possibly time for a pause. So silver, copper, platinum, Bitcoin. What's interesting to note about Bitcoin is from the start of the conflict, 1st, 2nd of March, we are actually up. So we're actually up around 8% from that point, which is interesting because everything else is down. Stocks down, gold down. Well, yeah, pretty much everything is down except oil and the DXY, meaning the US, meaning the US dollar. Let's see, any comments? The issue is whether it's talk or no talk. It's still causing whipsaws. Yep, absolutely. Euro dollar, conflicting comments on the euro dollar. It doesn't work. My email keeps saying only one entry allowed. Yeah, it's one entry per month. So the form resets once per month, by the way. This form right here resets once per month. You can use a second email if you have it, but you can only use one email per month. That's how we have it set up at the moment. So, names. Today is the 25th of March. So let's take a look. Okay, we have quite a lot of entries, which is good to see. Open up the wheel, paste, spin. So just to remind you, it's a 10K one-phase account, which is pretty nice. Shahab, congrats on being the winner. So after my segment ends, I will send you a code for the free 10K one-phase account. Okay? Marco, how are you planning to trade AUD-USD? Well, as far as AUD-USD goes, I mean, if we break out of the support level, what you can do is look for a breakout, retest of the level. I think that could work. Something like this. Pull back to the 20 MA. Okay. Once the 20 MA catches up a bit. What's the reading on the EdgeFinder? Let me take a look. Neutral reading at the moment, but pretty close to bearish. So it's -4. We only need one more point lower to become bearish. Yeah. I mean, this is a pretty significant support level. So if you do want to get in, I would look for a breakout of that level and a retest of that same level, basically. So yeah. Would I sell here? No. Personally, I would not sell at a support level. Maybe if you have really high conviction, maybe you can do it. Azen is long GBP-NZD. I'm not looking at GBP-NZD. No worries, Shahab. Congrats on being the winner. GBP-NZD is my main trade as well for now. Not really watching anything else. Okay, so we have two traders looking at GBP-NZD. Let's take a look. GBP and ZD. I guess you guys are long. What does the EdgeFinder say? GBP and ZD. Very bullish score, which is nice. It's not often you get a very bullish reading. Yeah, looks fine. Looks fine. Although personally, I would not be looking to buy the British pound at the moment. I think it's just a weak currency overall. I don't think it's such a great play. I know the EdgeFinder is very bullish, but usually I need an extra confluence alongside the EdgeFinder. And if I have a reading on the British pound that's not great, I think the UK is in a lot of trouble at the moment as far as the numbers go. We can quickly look at it. So if you go to economic data, you go to GDP, you put in GBP, bad. Inflation, what about the inflation? GBP. High inflation, so you could get a hawkish central bank, which of course then brings the value of the GBP up. But being hawkish into an oil shock is never a good idea. It can actually backfire. Rising unemployment, pretty bad thing right there. So not my thing, not my favorite thing at the moment. That's about it from me. Don't go anywhere because Tiger is coming on right after me. Also, don't forget, if you want to get funded, if you want to grab yourself a DNA funded challenge, make sure you use the code A1LIVE for 25% off. Thank you very much for watching. You can catch me tomorrow. I'll again be doing a joint segment with Alan, and I'll be giving away a free challenge. Good luck in the markets and stay safe. See you. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, traders? Happy hump day. Happy Wednesday. We're halfway there. We're getting there, ladies and gents. A little bit quieter in the markets overall, I think. I think we're still kind of pretty much just, if we're looking at all the major assets around the world, dollar, gold, oil, indices, it just seems like everything's still pretty well in a little bit of a congestion zone for the last couple of days, ever since we, kind of had the fallout from the Trump tweet, the Iran backlash, but Iran rebuttal, if you will. But it does sound like they did at least get their hands on the 15-point plan from Trump. Now they are denying the fact that they've talked, but they have at least acknowledged that they received that 15-point plan. So it's a little bit of a rehash of Trump 45 plan that they pushed at them. But regardless, from what we're seeing, from what we're hearing, it sounds like they may possibly meet tomorrow. Who the hell knows? We're getting yeses, we're getting nos. We'll just have to wait and find out. So, as a result of that, overall, like I said, I think the markets are just pretty well waiting to get a verdict on that. And as always, guys, do let me know if you have any specific tickers you'd like me to look at. I'll be closing the show out today. I've got my alarm set so I don't overshoot my runway like I like to do. And I just thought it would be kind of funny, since we were talking about beards and mustaches earlier, to show you guys why I grew mine out. So just taking a look in high school, there you go. There's your heartthrob right there, ladies and gents. Yes, we had the white pants in the 90s. My sisters colored my hair all the time. It was just ridiculous. But as far as just kind of a before and after, this right here is exactly why. Let me go find it. I just clicked on the wrong one. Miscellaneous. I wanted to show you this photo here. Okay. This was my before and after. Okay. This is when I was a lightweight. And then after this picture, I started hitting weights hardcore, and I kind of grew out the 5 o'clock shadow. But right there, guys, I'm in my early 30s, and I kept getting told I was like 23 to 27. So because of that, I decided to start growing out so I can at least look my age and not get mistaken for a college student. So anyway, I thought that was kind of funny to share. Just digging back into the markets over here, still got the dollar as the strongest overall currency. Okay. We did have a change, though. We did have a change. So you guys have probably heard me blabbering over the last week and a half about the Kiwi being in the basement, but the Swiss franc has now pushed lower. So it is now the weakest currency. If we take a look at the Swissy and find out the reason for that, as soon as my goodies start working over here, Swiss franc, we'll take a look, and you'll see that they did have a negative services PMI report come out yesterday. Just like 4 or 5 of these other currencies that had the purchasing managers indices number coming out, or index number, however you want to call that. The manufacturing was pretty healthy on all these, pretty much all of the currencies, but the services was just in the gutter. Swiss franc was no different, and it now pushes to the bottom of the pack. So yeah, easy way to look at this as always, guys. Buy strength, sell weakness. Dollar Swiss, Kiwi dollar shorts, Aussie dollar shorts. Okay. That's just from a fundamental perspective, but as always, keeping an eye on the EdgeFinder, we have to add in the sentiment and the technicals as well, to make sure we're getting our confirmation and our timing, because the fundamentals are the why. Fundamentals and obviously geopolitics, okay, kind of 1A, 1B right now. I would say geopolitics has the upper hand. We've been seeing a lot of movements on because of that, more so than really the data itself. So, when I wrote up my trade plan, and it took me a good solid decade to get it exactly how I wanted, through trial and error. But I had listed at the very top geopolitics / economic calendar, because to me, they go hand in hand. But is this a real accent? Yeah, I grew up in Tennessee, guys. My father was born and raised in West Tennessee, so that's where I got my start. Moved out here to Kansas and just never really shook the accent. But it's really bad when I go back and visit cousins in West Tennessee. If I'm there for a few days or for a few weeks, it sounds like I never left. It's crazy how accents come back to you. But for me, I just can't shake it. It's always there. Yeah, everybody here in Kansas calls me the hillbilly. And they call Kansas a redneck state, but it's nothing like Tennessee or, obviously Georgia, where Nick's at, Arkansas. That's where that's a lot thicker. But yeah, there's still a little bit of it out here. As far as assets, I'm keeping my eyeballs on. I've got, I did have a few items hit my alerts of late. So I just wanted to take a quick look. And again, guys, if you have anything you'd like me to check out, let me know. Euro dollar. So this is one that had actually bounced into a supply. What was that? Monday. But we were still kind of figuring out the results of the disagreement between, did Trump talk to Iran or not? So as you can see, we did bounce into that supply zone really about an hour and a half or two after the Trump tweet came out, which, for the euro dollar, it was down here at that time. But then we pushed up on the tweet, and then Iran, they went against that, and it kind of retraced. So it's basically just been hovering right here, guys. The euro dollar, okay, one of the most liquid currency pairs that there is, if not the most liquid. So just been going sideways for 2 days. I mean, yeah, it bounced into that supply zone. It did obviously give us a nice push down. I mean, if I would have been in this trade outside of the Trump tweet stuff, as far as a profit target goes, yeah, I mean, I'd still be in the trade. Yeah, we'd still be obviously right here. So really, you're only gaining about 30 pips, if that. Okay. So I just didn't want to get into it, even though everything else went, looked good. It was the 2-hour supply zone that I was keeping my eye on over here, taking a look at that indecision candle with a big steep drop that broke structures. That's the important part. Okay. But anyway, stayed away from that. We'll be interested to see if that ends up working or not. Obviously, euro dollar is still giving us a -8 over here on the EdgeFinder. But other than that, I did also have silver, because silver's given us a nice bearish reading as well, despite all the economic uncertainty with the war. Okay. It didn't really act so much like a thrive in chaos type asset of late, talking about gold and silver, but it is finally starting to get some pushes up. I mean, when that tweet came out, again, you would have thought it would just went crazy, but it just kind of stayed relatively in a box over here like a lot of the other assets. But having said that, it did bounce into a supply zone here that I was keeping an eye on. But as you can see, it chewed through it and still basically inside of it. I'm actually keeping my eyes on this zone a little bit higher up because I just think it looks a lot better. In fact, I think I put that on an 8-hour chart. Yeah. If I go put it on an 8-hour chart, I know that's a funky time frame we don't really use a whole lot, but if I don't see a clear picture on a 4-hour or a 2-hour or a daily, then sometimes I'll go into a 6, a 8, a 10, a 12-hour, but I don't do it very often. And again, I've said this before, guys, I'll go to whatever the hell time frame looks the best on a chart, because at the end of the day, I'm looking for consolidation. And I'm looking for the gaps, the runaway gaps, like I like to see, because that typically shows that there's liquidity, usually, but not always, on the other side of that gap. So, yeah, for me, 8-hour chart looked great. I mean, that's a beautiful looking supply with a big drop. Now, it left a gap on this chart, but it obviously retraced most of it. So, I don't know. I'm just going to be careful with all this stuff, with all this, all this craziness. But I am going to see. I mean, if I get if price enters this supply zone and gives me a nice 1-hour bearish candle, preferably a bearish engulfing candles. Those are the ones I like to see. But, as long as it's a bearish candle that at least retraces most of, if not all of the previous up candle, and I see that volume spread analysis activity pick up, I'm in. I'm in like Flynn. And then I'll be looking to take a profit down there at the 61 even. Somebody posted analysis on pound Aussie. Yeah. G drums 28. Yeah, we'll definitely look at pound Aussie here in just 2 seconds. I did have a Tesla bounce into a supply zone. I'm actually keeping an eye on the 4-hour that's a little higher up. So I know this isn't a stocks channel, but I did want to say that I'm keeping an eye on Tesla as well. Pound New Zealand, and then I'll get to your pound Aussie right after this. Pound New Zealand, if you guys remember, I drew up this impulse leg yesterday, I think it was, or maybe the day before. The move had already been made. If you guys remember, I kind of drew up this, was it a 4-hour demand? So the trade had already run off and left us. Yeah, this is when I was looking at it here. Now, going into some smaller time frames, I was keeping an eye initially on this little section of price action here, because on a 15-minute chart, it had given us a demand. It did give us a close right at. It did pierce this upper end, but I wasn't so much focused or interested in this structural break. Okay, I was more interested in this one over here to the left, which is the one that we had in the latter part of the New York trading session yesterday. And clearly we didn't break any of that structure. So because that didn't happen, I ignored this demand zone. Now, I drew this zone when price was, in this area. But for me, and why I stayed out of it, is because it did not break that structure right there. I wanted to see price continue and close up here somewhere, showing that it's a brand new impulse leg. Remember, an impulse leg is a leg of candles, and it could be a few, it could be several, a grouping of candles that break structure and closes. We didn't get that. Okay. But had we gotten that, then I would have been interested in this demand zone for a possible buy. Okay. But as you can see, we didn't get that, did we? So because we didn't get that, that showed that this demand zone really wasn't that strong. If it was a strong demand zone, it would have broken a structure and closed above it, but it didn't. So as soon as I saw it retracing, that's when I was out of the idea. Okay. And then as you can see what happened, it just pierced right through. And that's understandable because, again, it wasn't a strong demand zone to begin with. It has been horrible to trade as of recent because of the uncertainty Trump has put out. Personally, I don't think Iran will surrender. The terms are too one-sided. Yeah, well, you know what? I get that. I was actually just doing a little digging on the details of that 15-point plan earlier, just kind of, having a conversation with my old buddy Grok. And I came up with this. So basically, here's what. Now again, Iran has denied talking to Trump, but they have acknowledged receiving this plan. I saw another headline somewhere, and I'll get to this details here in a second. Okay, a note on financial juice. This is apparently from Iran. The U.S. stepped up efforts to secure a ceasefire. That's being acknowledged by Fars News, which is the same media report that denied that they even had a conversation. So they're at least acknowledging, whether they're the National Enquirer of Iran or not, they're now at least acknowledging that the U.S. is stepping up, that President Trump's stepping up. But nevertheless, I digress from that. This is the demand. So obviously, guys, Trump said yesterday he was swearing in Mark Wayne Mullen for the Department of Homeland Security Secretary. And he said his first three demands are all the same. No nuclear weapons, no nuclear weapons, no nuclear weapons. Okay. As a little bit of a joke, but it's listed only once on here. But yeah, that's basically the main demand. No nuclear demands, transferring the uranium to the IAEA. And I don't know what that stands for. I got to be honest with you guys. It's a 4-letter organization. Dismantle the sites at Natanz, Isfahan, Fordo, which they pretty much kind of did already through the military force, but limits on the restrictions on the missiles. They must end their support with the proxy groups, talking about the Houthis and Hezbollah and all them. Ensure the Strait of Hormuz remains fully open and not charge them $2 million a ship. Did you guys see that come out yesterday? Iran apparently had started charging some of these tankers $2 million. Okay, that's million with an M. $2 million just for passing through the strait. So that's something that President Trump talked about in his plan that he's trying to get rid of. But in exchange for all that, President Trump did say we'll lift the sanctions, talking about the nuclear-related sanctions, and assist in the civilian nuclear energy program. Now, this is what Iran was talking about the whole time that they wanted, right? They wanted to be able to have their own civilian nuclear energy program. So here he is, President Trump, okay, according to the document, saying that he's okay with assisting and supporting that under international supervision. So that's one thing Iran said they wanted, right? So Trump is offering to put that in the package. And then, of course, a little more generic, but broader economic, diplomatic normalization. Details are still pretty vague on it, says Grok. So anyway, that's just a quick look at that. It's whether you like it, whether you hate it, at least something has been offered on the table. That's kind of the way I see it. A step in the direction of, hey, let's finish this crap, right? Come on, let's get this crap over with. All right, pound Aussie. I'm sorry, G drums. Let's have a look at that for you. Pound Aussie is a +6, so we're looking good over here. No real help from the big banks or institutions. Pretty neutral on that. The crowd is net short, so that's a good contrarian signal. There's really two items from a fundamental standpoint favoring the Aussie more so than the pound. That's the GDP and the consumer confidence, which consumer confidence is more of a forward-looking indicator, guys. A lot of zeros, a lot of meets expectations, but you do have a few, 5 reports favoring the pound over the Aussie, thus the +6 score. So let's go have a quick look from a technical standpoint for you. All right, so we have bounced into this overhead supply zone. Okay, daily, I like this positive push. I like that we've broken structure to the upside. I like that my 8 EMA has went above the 21. Now we need a close for me to be really happy with that. I would like price to close somewhere up here or push through the rest of this supply and then look for a retracement possibly tomorrow because, you know, this candle is still live. This candle is still active. We very easily could retrace all this gains on this, you know, the candle that opened for me as of 5 p.m. yesterday. Okay. The new Asian session candle, if you will. So we very easily could still see some push down and push our EMA below the, you know, the 8 below the 21. I doubt that's going to happen, but it's very possible because the Aussie dollar is one of the stronger currencies still. Remember, that was the strongest currency for a while. Just having another look over here at the oh, wow, look at that. We actually did have a big shift. I totally forgot about that, the PMI data and everything. So, yeah, Aussie is actually the third weakest. Wow. And then where's the pound at? It's a 50, so it's pretty neutral. Okay, all right, that makes a little more sense. So that makes a little more sense, but nevertheless, I would like to see a daily candle close on this, preferably if it could break through the rest of the daily 4-hour supply zone confluence that we're looking at. If we can do this right here, something like this, get a close up here, and then retrace and find a newly created demand zone, I'd like that. I'd like that for a possible buy, but I definitely would discourage trying to buy something that's currently in a supply zone. Okay. As always, not financial advice. You guys are all adults here. You can do what you want. I'm just telling you that even if you gave me a $50,000 account, I would not be buying this. I want it to prove that it's strong enough somewhere in here to push through and close above those overhead supplies and resistance as well. I mean, if you just put a line, you know, put a line right there, that'd be pretty much your resistance level, right? Remember, support and resistance, supply and demand oftentimes are in very similar spots. But the big difference is the zones themselves, the supply and demand zones, that represents unfilled orders. Because again, just to go back, I try to go through this periodically just as a refresher, but back here when price was still in this zone, perhaps price dropped too fast for some of these institutions to complete their short order. So oftentimes they'll wait weeks and weeks and months. Oftentimes they're waiting for price to return so they can finish the order. Because remember, if they put in their full entire order over here, they're going to get a horrible fill on slippage. They're going to push price too fast for them to get their order in, you know, in that zone. If they place a full order, they may get some of it filled down here, whatever the case is. So for me, I'm not bullish on this until it proves that it can bust through this supply zone. And then, you know, if we go to some smaller time frames, maybe we could find a demand zone underneath. But the reality is, you know, even if I look at a zone like right here, okay, this actually represents a demand zone here. I don't personally like it though, because to get that colored in for you. Okay, when price left this zone, it did not immediately shoot and break a structure. It took a while. It took several more hours of just very slow, you know, and that's obviously from the Trump tweet or the kind of the fallout, if you will, of the Trump Truth Social post. So it doesn't seem that strong. Now it's got the benefit of having a former support. That's that blue dash line from way back here on February 12th. So I do like that. I would perhaps look at a partial position here. Partial position if price were to just retrace from here. But even at that, I'd be leery because, again, we're bounced into a higher time frame set of supply zones that to me would be way stronger than a 1-hour demand zone. What are you gonna choose? A daily 4-hour zone or a dinky 1-hour zone that didn't even initially break a structure point? So yeah, I would stand by my first drawing there. If I see a close up here, then I'd be interested in looking for a retracement into a zone of demand. Hope that helps. Let me see if I have some other notes over here on my Excel spreadsheet. Guys, the code for keep in mind, Nick does have his code for the Ola Prime, 35% off. A1 Live, I do believe, is still the code. I know the commercial says A1T35, but I do need to get that confirmed. But nevertheless, yeah, just let us know if you guys have any problems getting you an account. If you guys are interested in Ola Prime, checking out a challenge account over there. Good stuff, guys. Let's see. I went over Pound New Zealand. I went over Tesla. Hey, and also, guys, one other thing I wanted to note. Of course, I'm with FX Empire now, doing videos and shorts over there for them. I've actually talked to my team over there, and I'm actually going to create just a quick little shorts series. And basically all it is I'm going to look at every single indicator that we follow on the EdgeFinder, and I'm going to go in order: fundamental analysis, sentiment analysis, technical analysis. And I'm literally just going to make a shorts based off of, one short per indicator. So today I'm actually going to create one for the GDP, and I'm just going to go down the list. Okay. Everything that we already follow, just to give like a 60-second snapshot of what that is, how often it comes out, and why is it important. Does that sound like something you guys would be interested in? If so, just go to FX Empire over here and you'll see my shorts. I would recommend starting by watching this shorts right here. If you guys get a chance, and it'll kind of preview what I'm doing. Now, whatever you do, follow each and every single video that Nick puts out first. I do that every single day, guys. Okay. When I go to when I'm away from trading, I'm away from work. The first thing I do is go to Trader Nick's daily video that he posts. That to me is the most important thing that I would want you guys all to see, and look at every single day's video. If and when you guys have, free time after that and you're wanting more information, you're wanting more content, pop on over to FX Empire and see what I got going on. That's not to diminish what I'm doing. I think it's some good stuff I'm creating, but definitely follow Nick first. He is a wizard when it comes to explaining the fundamentals more better than me. Okay. I'm newer to the game of explaining it all, and I'm trying my hardest to study my my $$ off of it for it. So I'm getting there, but I definitely want you guys to know, follow him first and watch every single one of his daily videos. There's not a better recap in all of YouTube that I've seen than what Nick does on his daily videos, and obviously the streams. So cover that first. If you have time after and you're still looking for more content, pop on over to FX Empire, take a look at the projects I'm working on over there. FX Empire Basketball, that's what it's called. Yeah, and I got a couple minutes left. If you guys have any other last second tickers or anything, let me know. As far as EdgeFinder goes, let's see here. Yeah, New Zealand dollar is still giving us that bearish signal over here. I did want to take one look at it. I think I'm still a ways away. Yeah, see, again, guys, a lot of these pairs, the way I'm looking at them, are just too sideways and congested. And what do you guys hear me say all the time about that? That's diddling in the middle, right? That's just sideways. That's retail chop. Okay, that's what I like to say. This is just one big retail chop zone. This is a lot of novice traders trying to position themselves rather than waiting for something that's actually fleshing out. It's just too sideways. So, I can't do anything with Kiwi dollar because we have bounced to this demand zone down here. And we got a little deeper into it on Monday, I do believe around the time of that Trump tweet. So I'm waiting on, because this is the number one bearish item on the EdgeFinder. I am waiting for a push to 59 even, because I do have that 1 hour demand, 1 hour supply that's kind of nestled in the top half of that 4 hour, which is nestled in the bottom half of the daily. So it's odds enhancers. It's multiple sets of eyeballs. The more eyeballs I know that are looking in one spot, the better. Okay? Because there's supply and demand traders. There's a lot of them out there. And there's a lot of them that only trade the daily chart. There's a lot of them that only trade the 4 hour chart. There's a lot of them that only trade the 1 hour chart. And obviously all the charts, all the time frames lower. So if I see them grouping in the same area, that's where I want to be. So I like that all this, I do like, just to kind of put a button on this, I like all this is happening, because it's basically creating a fair market value. And when I see fair market value, that means the upper sides, the lower sides, there's going to be some liquidity. And then the institutional zones, the institutional supply and demand zones are typically a little higher up or a little higher down. So that's why I'm waiting on this one up here. Daily, obviously one of the biggest time frames for this stuff. Daily 4 hour, that's my favorite confluence. So yeah, that's what I'm waiting for Kiwi dollar as far as a short. And then just to take one last look, dollar yen obviously being the most bullish. I'll take a look at that real quick. Yeah, just getting that same consolidation, guys. You see, I got my master pattern box on. It's just consolidation. So I do have a demand down here with an alert set at 158 psych level down here. Now, the one thing that I disapprove of with this demand zone, and there goes my alarm, the one thing I dislike, and I'll end it on this, about this demand zone is the fact that it did not push through and close above this overhead resistance. Okay. I wish we would have had a close up here and then a drop down, because that would have made this demand look sexy. But instead it didn't. Okay. We're down here. So when price comes into this zone, I'm going to be very strict on the 1 hour bullish close after dropping into catch those unfilled orders. We do have a little bit of liquidity chilling right here, okay, because of these buyers that pushed price up. So that's obviously going to be sell orders. So that we got the benefit of sell orders inside of the unfilled orders. Ladies and gents, I'm going to be strict on that bullish engulfing candle with a wick, VSA volume picking up, and then maybe we'll buy the break out of that. So with that, ladies and gents, that's all I got for the day. Have a wonderful day, and tune in tomorrow. We'll all come back and run it back. Have a good one.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.